All right, we are live. Thank you for watching. I can't wait to talk about this. It's my 2023 housing market forecast. I have so much to talk about today. I can't wait to dive into all of it. I'm going to share lots of slides, lots of graphs, everything that you need to know about the 2023 housing market and what we're forecasting here. I think the housing market next year, there's so much coming our way. And as we talk about the forecast for next year, this is really about what the experts are saying, what's most important as we go into the new year. And I'm going to pull all that together for you to help you make sense of it. And I think the best place to start is really to talk about what's happening or what's happened in 2022. And in 2022, the housing market was really defined by inflation and rapidly rising mortgage rates. And we know that the Federal Reserve has been trying hard to bring down inflation, slow down the economy, get that all under control. And that's really defined what's happened this year. And of course, as we go into 2023, what's ahead for next year, I think, we're not out of the woods yet. But as we look ahead, it's going to be defined by can the Fed bring inflation down and keep it down. And we're going to talk a little bit about that today. And will we see stability in the market? This market in 2022, there's been so much volatility, especially around rising mortgage rates. And so will we see that stability next year? That's a big question. And I'm going to share with you today is what I'm going to share with you is a look at the projections from the experts on mortgage rates, on home sales, and home prices. And that'll get us all headed into the next year so that people feel comfortable participating. So what I want to start with is this quote from Jerome Powell. Jerome Powell's the head of the Federal Reserve. This is a quote I've actually shared earlier in the year. So it's amazing to listen to this. And I start to laugh a little bit when I reread it. I come back to it every once in a while. I was like, yeah, this guy planned this. I'd say if you are a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together and where inflation is down low again and mortgage rates are low again. And this really sums up the essence of the Federal Reserve, and what they were out to do this year was to slow the economy, to make your assets worth less. That was the goal. That's how they are tamping down inflation. And we know that housing is a big part of all of that tamping down. It's one of the pieces that needs to come back into balance. And I'm not going to disagree with that. It is not normal to get 27 offers on one of my listings. I mean, the sellers are thrilled, but then we got 26 other buyers that are like, what is going on here? So, everything that influences the housing market this year is all driven by inflation. And we're going to talk a lot about that today. And what you're going to hear me say over and over and over is it's all driven by inflation. There's a lot of work to be done, but the economy right now is really in a place where we're trying to get rates down. And we've seen that impact on demand. It's impacted home sales because the rates have gone so high. It's had a downstream impact on home prices. And there's been all of these factors in 2022 that have really led to where we're at right now. So the Federal Reserve, they met earlier in December. They're going to meet again. I believe it's January and February next year. And they're still taking steps to tamp down inflation. They're not slowing down on that. So as we talk about mortgage rates, this is the first topic that we want to tackle in the forecast. And what I think we can start with is, where have we been so far this year? And as I mentioned a moment ago, 2022 is really defined by rapidly rising mortgage rates. Unquestionably, you can see it here. This is a look at Freddie Mac 30-year fixed rate going all the way back to January. And if you followed along with me on my socials, you've seen this graph before. It's sources right there, Freddie Mac, like I said. And what you can see is at the beginning of the year, mortgage rates were almost at historic lows, right? And then they've risen pretty significantly through the year. And we've seen a little bit of reprieve over the last few months, since about second week of November. Maybe it's a nod that inflation is starting to level out, starting to turn, potentially starting to come down. But I don't think we're out of the woods yet, right? Like I said, it's something that we need to keep an eye on. We've seen a little bit of relief in mortgage rates recently, but the story this year is not about where the number is today, okay? It's really about how mortgage rates rose so quickly. They've more than doubled in a year, and we've never seen that happen in a calendar year. And again, it's not about where the number is right now. A 7% mortgage rate is historically low. But when our history runs back 12 months, it's double where it was in March. So what has that all done to the housing market? It slows buyers' demand because everybody is looking at this and they're going, wow, this is a lot of fear. This is a lot of uncertainty. I'm not sure where things are going. Are mortgage rates going to keep going up? Am I going to make a bad investment? All of that has come together and slowed the pace of home sales. And it's not necessarily about the fact that mortgage rates ticked up over 7%. Again, that's a historically low rate, but it's that rapid rise that happened throughout the year. And what the housing market is looking for is stability. Stability in the housing market, they're best friends. Those two things are salt and pepper. And this year we've seen a lot of volatility in the market. So we're really looking for that stability to come back into play next year. And this is all about inflation. So instability in the market came from rapid rise in interest rates. Rapid rise in interest rates is trying to tamp down inflation. So let's talk a little bit about what the experts are saying, what the experts are projecting for mortgage rates next year. This is a look at what Freddie Mac, Fannie Mae, Mortgage Bankers Association, and NAR, National Association of Realtors, are projecting for 2023. And it's the latest forecast that we have. It came out in November. And really, if you average them all together, they're saying somewhere between 6 and 6.5% next year. Maybe a little higher at the beginning of the year, maybe coming down a little bit. But again, it's not really the number. It's not the mortgage rate number that we're looking for. We're looking for stability in the market because that brings certainty back in. That brings buyers back in. It's the volatility that's really been a challenge in the housing market. And as I look at this chart, mortgage rates are really hard to project. Even the experts are projecting them, that project them right now are having a challenging time kind of pinpointing exactly where they go because it's a moving market. There's a lot of factors back there. So what I don't want you to focus on is the exact number in the moment, right? Because whether it's somewhere between 5.5% and 6.5%, wherever that may land, stability is really what we're looking for mortgage rates to get down there and stabilize and shift within a normal range. And that'll bring a little bit more predictability back into the mortgage market or back into the housing market and the mortgage market. And right now, we know inflation is high, mortgage rates are going to be high. The Fed is continuing to try to bring that down. And we've seen little hints that maybe that's starting to happen, that we're going to continue to watch and see where mortgage rates go. And here's a quote I shared from Greg McBride. I gave a little sneak peek earlier with another quote from Greg. Bankrate.com. Everybody goes to check Bankrate to go look for their mortgage rates. Greg McBride says mortgage rates could pull back meaningfully next year if inflation pressures ease. Again, it's all about inflation. And that's certainly, what we're looking for. We're watching inflation. We're watching the 10-year Treasury yield, watching all of those factors to see where mortgage rates go. Those things all move congruently together. So as we continue to talk about that and we watch the Federal Reserve, they don't call mortgage rates. but they definitely have an influence on them. We'll talk too much. So again, when the Federal Reserve meets and they raise the federal funds rate, that does not increase mortgage rates directly. But if they continue to make aggressive rate hikes, as they've done throughout the year, we may see mortgage rates go back up before they come back down. We're watching inflation. We're watching that reaction to see what happens in the market and truly looking for stability in the market. And if inflation pressures ease and mortgage rates pull back, that is certainly what we hope will happen. Inflation pressures ease, mortgage rates pull back. Let's make that happen. Let's just make that happen. That is definitely exactly what we want. So as we start to talk about mortgage rates, we know that they've had a major impact on home sales this year. As those mortgage rates cranked up, the pace of home sales just went back and went down. Talked about that in my last episode. And as we look ahead to the home sale forecast for the coming year, I think inflation has really had an impact on that. Mortgage rates are the driver. So what I want to do next is share with you a little bit about what the experts are projecting for home sales, where they'll land next year, the look ahead for next year, and how they're all coming together. So let's take a look right here. This is the total number of home sales, and it's going actually all the way back to 1999. It's a combination of new sales and existing home sales. And we look at the forecast for 2022. We're projected to end this year in just a few hours. It looks like the experts are saying about 5.8 million home sales this year. So let's put that into context. If you're coming off of last year, where we had a record number of home sales at 6.9 million, 6.97 million, let's call it 7 million home sales, 5.8 million feels like a big slowdown. I'm sure, you've heard some grumblings around like, hey, why didn't my house sell? What's going on? But there's been a total ramp down in home sales and increase in marketing time. And it feels like last year we're just completely cruising, right? In 2021, it was a buyer frenzy. There was lots of transactions. 2022 is a very different year than what we'd seen before. So let's talk about this analogy. Let's say you're driving down the highway, you're going 100 miles an hour, okay? And you're just cruising along, you're blazing, you come around the corner and you see flashing lights, and you pump those brakes and you slow down and you go the speed limit. Feels like you are crawling. You know what? You're going the speed limit. You're going the normal speed. And that's kind of what we experienced in 2022. So 5.8 million feels like a big drop off in 2022 from where it was in 2021. 5.8 million goes back to around 2015. So, last 5-10 years, it has been a pretty strong pace, and that felt a little slower. But when we talk about the forecast for 2023, experts are saying about 5.1 million home sales, more of a slowdown. So next year is going to feel even a little bit slower, like you're going 50 and a 55, okay? We know that inventory is still significantly low, and there's frankly not enough homes on the market. Let's just park that there for a second. Let's put that into some perspective. And as we look at 5.1 million home sales projected for next year, what the experts are saying, we know they're making that forecast right now in what we might call the depths of winter. It's a little chilly out there in the real estate world, right? Inflation is high, mortgage rates are high, inventory is low, new construction is slowing, and buyer demand isn't as high as it was last year or at the beginning of this year. So all of those factors kind of layered into this projection. But what I imagine, where I see this number going, is maybe a little bit higher, because experts tend to reforecast as the year unfolds. And as we look for that nod to inflation potentially coming under control and mortgage rates potentially coming down, or more in a more stabilized environment, we may see this number tick up. The transactions could start to normalize. And it's definitely something we're going to keep the eye on, right? Next year, I'm going to keep you updated on how posted on home sales and what the demand is like and what the projections look like. But right now, the projection is roughly 5.1 million home sales, something we haven't really seen over the past 10 years. So let's break that down. You can see where this is coming from. I like to average kind of a consensus altogether. So Fannie Mae, Freddie Mac, Mortgage Bankers Association, National Association of Realtors, anywhere from 4.5 million to 5.5 million, brings us down to an average about 5.1. You know, the truth is probably somewhere in the middle, probably not too high, probably not too low, but we like to look at the average, and it is the most current data that I can bring right now. And I'll update you as the projections and data changes. So let's also talk about what could potentially kickstart home sales next year. Lawrence Yun. He's not going to be the one that kickstarts it, but he's going to be the one that we're going to be listening to. He's the chief economist for the National Association of Realtors. I believe he has the brightest mind in real estate. I think this quote from him really says it. The upcoming months should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. So as we're looking for stability in the market, we've seen mortgage rates rise. We've seen a little bit of relief over that the last couple of weeks. We've seen some stability. Right? I know a mortgage broker in particular, a very high producing mortgage broker that had 3 closings in December. That's a very low number for this particular person. In January, they have 14 pre-approved new buyers for the market. So as those mortgage rates came down, brought some stability and brought people into the market saying next year is my time. Now, I certainly hope they've peaked. We're going to continue to watch inflation, continue to see where that goes. But as that stability comes in and mortgage rates come down, could bring some more buyers into the market and see how this plays out. So as more buyers come into the market, we want to talk a little bit about home prices. This is a big question on everyone's mind right now. And if you haven't watched my vlog that I did last week, I definitely encourage you to go back and watch it. I did pretty good deep dive on home prices and where they are today and what's happening with them. So if you have questions about that, definitely go back and watch it. Give me a call, I'll take you to coffee. But what I'm going to do right now is share with you the forecast on what the experts are saying about home prices in 2023. So here's a look at what the 7 sort of key experts are forecasting for next year. This is a year-over-year home price appreciation. And what we're seeing is some are saying a little up, some are saying a little down. And again, as we average all of those together, we're looking at a roughly neutral or flat home price appreciation for next year, kind of parrying both sides of 0. I think I'm okay with that. And this, again, though, this is all based on local markets. Some of those more overheated markets are going to see more movement in home prices. I've been hearing all sorts of stuff about things happening in Arizona, Nevada, Idaho, where home prices have seen more movement. And I talked about that last week too. So, let's put that on pause for a second. The reality is we're coming off 20% year over year home price appreciation at the beginning of this year. And this feels a little bit different right now. We're probably more at around 10 or 11% year over year home price appreciation. And as we look into all of the factors that go into next year, roughly neutral. The truth is, no one is calling for massive declines in home prices, but roughly neutral home price appreciation. We're still seeing low inventory, more buyers than sellers in the market, and that's going to continue to keep upward pressure on prices. It's going to continue to keep prices in check, but year over year, frankly, isn't the only way that we look at this. We also look at month over month home price appreciation. And what we see right now is you can go back and watch what I talked about last week, is a little bit of a month over month decline in home prices. Like you could take 1% and we're going to parry both sides of 1% decline in the national market, and the Portland market, in my opinion, has seemed about the same, depending on house, depending on situation. Some homes, some areas have been hit a little harder. Condominiums always seem to be something that gets hit harder first. So we're going to continue to watch home price appreciation. It's a very local, hyper local data point. But this is what the national forecast looks like. And I think Portland's not going to be too far off of that. And I know that you guys want to hear about, where my home value is. But if you really want to get deep on your home value, give me a call and I'll run a little analysis for you. But you're going to be hearing the national forecast in the news. And, if you need to know what's happening locally, then, maybe it's time to give Joe a call. Data is critical. This is probably my favorite slide in this whole presentation. Mark Fleming says this very well from First American. It's a Fortune 500 company involved in the real estate industry. It says the housing market, once adjusted to the new normal of higher mortgage rates, that's essentially what we're sitting on now, will benefit from continued strong demographic-driven demand relative to an overall long-run shortage of supply. This just nails it. On every level, this nails it. It's a perfect summary. So we still have demographic demand out there, especially among the millennials. They are the largest home buying cohort in history. And they're still entering the market. There's a lot of people out there who are waiting for the economic dust to settle, but at the same time, the demand and interest is still there. So once we start to see some of that stability, once we start to see some of that consistency, the demand is there. Supply is still low. That should continue to keep home prices in check in most markets. And as we look ahead, I think this last quote from Fannie Mae, Doug Duncan, he says this well. From our perspective, the good news is that demographics remain favorable for housing. So the sector appears well positioned to help lead the economy out of what we expect to be a brief recession. Here we go. I started at the beginning, talked about it's all about inflation. And the more we start to see that nod towards the Fed potentially bringing inflation down, really working hard at that, we start to hear more chatter about a potential recession. And there's a lot of people out there saying that's more and more likely right now. And so if we come into a recession, this is kind of a big question that a lot of people are asking. What happens to the housing market? And what we know from history is that in times of recession, over the past 6 recessions, in fact, in this country, mortgage rates have actually come down. Now, that doesn't define exactly where we're going to be every single time, but history does teach us a lot. So, the housing market with its demographic demand, millennial cohort going into purchase, with inflation and the nod to inflation, ideally, hopefully getting under control over the next year, mortgage rates mortgage rates stabilizing, the housing market leading the economy out of a brief recession. We certainly don't wish a recession. That's a tricky one to say. Wish a recession on anyone. But the question is, what does that mean for the housing market? So as we think about what's ahead for next year, and as we look into 2023, what the experts are saying, the story is really around, are we going to be able to see inflation come down and stay under control? And will we find stability in the housing market? That is going to be the story right there. And I'll continue to keep you updated as the year unfolds with the new data. I want to, keep everybody away from the hysteria. Remember, the media likes to terrify, so I want to be in there to clarify exactly what's going on. So let me wrap up. Make sure that you have everything you need to participate in the market for next year. And if you want more insights on the market, I would encourage you to download maybe my winter seller's guide or winter buyer's guide. You can grab those in any one of my socials. It's all in my profiles. I'll put a couple links in this video so that you can have those. But I hope that gives you a good clarity on what we're talking about for next year. I think in the long run, housing has always proven to be a great investment. And I think 2023 is going to be a great launch year for a lot of people to build that generational wealth. So thanks for watching. Looking forward to do something again in mid-January. Hopefully I'll be able to pull together enough information to sit here and talk for another 20 minutes. Thanks.